Hello everyone. So the topic which I have taken today in this value investing series is how the US dollar, the USD, has become the dominant global currency. So if you see the majority of the trades, the global trades, the transactions, everything is happening in US dollar. So what is the main reason behind which everybody, the majority of the global trades and countries who are doing the trade is doing the trades in US dollar? If you see in earlier times, the currency was pegged to gold. So obviously the question is, what is pegging? So pegging is like, if I talk in dollar terms, for every $1 printed, I have to keep equivalent gold in the country's reserve. So the reserve backing of the country, a particular country, is kept in its particular central bank. In case of US, it is US Fed, as you know, and in case of India, it is Reserve Bank of India, RBI. So going back to the World War times, whether it is World War I or World War II, US, United States of America, if you see, have never participated in the war as such. If you see, in World War I, they were never there, and World War II, towards the end, after the Pearl Harbor incident, after Japan bombing the Pearl Harbor of the USA, then only they have started participating in the World War, which was towards the end of the war. So they were not much as participants of war. But if you see, majority of the weapons, the food, the wheat, the cotton, everything was actually the raw materials for the war weapons and products. Everything was supplied by USA. So I would say strategically they were not participating in the costly affair of war, because if you participate in the war, already you know that there will be a lot of weaponry requirements, then there will be a lot of spending by the country, which is not actually productive but just for the war purpose. And by the time the war is over, the majority of the amount which is left out in the country's reserve will be almost over. And also, if you see that the things which the US was selling to various countries which were participating in the world wars, the trades were done in return for gold. In the sense, if some weapons are manufactured and sold to the X country by USA, then the X country will be giving USA the payments in gold. So you can see that by the end of all the wars, the world wars I meant, so by that time, the 60% of the total gold reserve was only with US. So as I said, the currency was pegged to gold. So if a country has to print money for their spending or infrastructure development or anything, so they will have to have equivalent gold reserve. So as I said, soon after the World War, 60% of the gold reserve was with US. So majority of the countries couldn't print enough of the currency because the gold reserve was not enough with them, because majority has gone to US after the war. So USA had a big, strong gold reserve with them. So by the end of World War II, around July 1944, in Bretton Woods, USA, at the Washington Hotel, a conference was held, which is in USA, in this hotel, by gathering majority of the countries worldwide. So it is told that almost 44 countries were there in this Bretton Woods conference. So the conference was actually to discuss about the currency and the inadequacy of gold reserves with the various countries, and how they can go ahead with the printing of currency, etc. So unanimously in the meeting, in the conference, it was decided that 1 ounce of gold is pegged to 35 US dollar. So similarly, all the currencies in the world who has actually participated in this conference, those countries, their currencies were pegged to US dollar. So they had various rates. So on the screen you can see the various rates at which the pegging was done to the US dollar, whether it is yen or pound or whatever, it is already mentioned on the screen. So after this, US dollar was the currency which was utilized by majority of these nations to do the trades, because of the strong economy, the good gold reserves and all those things, and the strong trade relationships and the stability of the economy. So this is all factors which are required for a currency to be strong and to be trusted by others, because there will not be big fluctuations as per them in the US dollar because of the strong economy. So unanimously, everybody started trading or doing all the transactions in dollar equivalents, the US dollar equivalent. So later in 1970, what happened is that there was a lot of changes in the economy. Many countries did a lot of adjustments. Many countries started getting back their gold reserve from US by uh, giving back US dollar uh, to the central bank of USA. So as their the respective countries' economies improved, so they were able to get back the gold reserves from the US. So USA understood that there is a falling gold reserve from their bank, so central bank. So they were actually bothered about this. So because of this reality or understanding that the gold reserves are falling down, and the US wants more printing to be done for the economy to go ahead. So the then president in 1971, Mr. Richard Nixon, so he announced that America is withdrawing the gold standard. So the pegging of 35 US dollar is equivalent to 1 ounce of gold. That pegging, that system, he told that he is withdrawing that. He just declared that.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what is this action, which is very technical, what does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you want to buy a foreign car or take a trip abroad, market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today. The effect of this action, in other words, will be to stabilize the dollar.
And they'll be going to use fiat currency. So what is fiat currency? So fiat currency is like without any country backup. As per the need of that country, they'll be printing the money, printing the currency. Say in case of USA, they'll be just printing the US dollar without any backup from other countries, without any gold reserve. And that's how it was declared by Mr. Richard Nixon. So the Bretton Woods conference, the Bretton Woods system was there, like pegging of US dollar to the gold, and again all the currencies being pegged to the US dollar. So all this system fell. So the other currencies were no more pegged to the US dollar. But if you see, by that time, majority of the countries in the world has been transacting all their trades in US dollar only. So based on the Bretton Woods system, they had been following that. They never expected that US is going to come up with such a declaration wherein they'll be withdrawing the gold standard system. So what happened? What you can see is that all the countries just continued transacting in US dollar. Politically and economically stable countries like US, the other countries don't expect them to fall at all. They have a trust that the economy is strong, the US economy is strong. There is no other economy which is so strong, stable, and openness. So such feeling was there for all the countries, and they continued trading in the US dollar only. So they never expect this economy of US to fall in future also, because their trade relationship, their strategic relationships, their terms of war, everything, or their participation in various wars were very less. So all these things were positive things for the US dollar to be selected as a trading currency. Also, US dollar was available in excess worldwide. Means adequate USD currency was available worldwide. If you see, US dollar is not just a stable currency. So this availability in excess of US dollar in various countries was the important factor here. Otherwise, if you see the Swiss franc or else the Singapore dollar were more stable currencies. But if you see, their availability were very less. So as you know, Switzerland, countries like Singapore and all, it is having a good economy, stable economy. So their economy is also, their trade relationships, their terms with other countries, everything, trade deals with other countries also is very good. So their economy is always growing, and it's a developed economy. So they were also having a stable currency. But they were not selected as a standard because of the unavailability, as I mentioned. But the disadvantage here is that as the majority of trades are done in US dollar, so the US central bank, the Federal Reserve, is involved in the various transactions worldwide. This is done through a network called SWIFT network. The thing is that if US wants, then they can stop the other countries from utilizing or using the SWIFT network. So SWIFT network is an online platform, messaging platform, which facilitates the various trades between the banking systems of various countries, which is interacting or trading with US dollar. So these days you are hearing that US is imposing sanctions on Russia and other countries. In case of war, in case of Russia-Ukraine war, the sanctions were applied by US. So the sanctions are like they don't allow the trades to be done in US dollar by blocking the SWIFT network. So it was a SWIFT ban. So Russia thoroughly opposed this, and there were a lot of issues. So I will not get into that. So this is the only disadvantage, wherein US or the country with whose currency is being utilized can take undue advantage, apply sanctions on various countries if they don't like that country. So if you see on my screen, again, there is a foreign exchange market. So forex market, the currency which is utilized and traded worldwide, there is a platform wherein there will be a lot of financial institutions, banking system, this SWIFT network through which all the interactions are done. Further, how this US dollar become more strong using petrodollar concept by the crude oil deals with Saudi Arabia and Middle Eastern countries, and also the petro recycling concept will be discussed in detail in the part 2 of this session, which will be the next video. Meanwhile, I'll like to convey one more concept here, which is the US dollar index. What is a US dollar index? So US dollar index serves as a benchmark for evaluating overall strength or weakness of the US dollar in foreign exchange, that is the forex market. So this is like it shows the overall strength or weakness, whatever it may be, with respect to the other currencies. So the other currencies can be the euro, then Japanese yen, British pound, Canadian dollar, Swedish krona, or Swiss franc. So this is like how strong the US dollar is and what is its position in comparison to the other currencies. So the index is calculated by taking a weighted geometric mean of exchange rates between the US dollar and the 6 major currencies. So 6 major currencies already I mentioned above. The US dollar has become an essential tool for, if you see, traders, investors, economists, to assess the strength and weakness of the US dollar, basically to track its performance in the forex exchange market. US dollar index is otherwise called USDX. So the fluctuation in this index reflect the dynamics of international currency markets and can have significant implications for various sectors, including trade, investments, and decisions related to monetary policy by the central bank, say in case of USA, the Federal Reserve. So the history of USDX dates back to 1970, wherein we discuss about the Bretton Woods Conference. So the Bretton Woods system, which fixed the exchange rate of US dollar to the gold. In response to change in international monetary system, USDX was introduced in 1973 by the Intercontinental Exchange, ICE. Initially, the index was set at 100 based on its reference date of March 1973. Over the time, the composition and the weighing of the currencies included in the index has been revised to reflect changes in the global trade patterns and economic importance. So how to interpret the USDX? So USDX has a baseline value of 100, as we mentioned, and reflecting a relative stable dollar value when the index surpasses 100. So if the index is above 100, say 100, 105, that shows the relative stability of US dollar above the other dollar currencies. So it indicates a strengthening dollar against the currency basket, whereas a value below 100 signifies a weakening dollar. An increasing USDX signifies a stronger dollar, influencing international trade, foreign investments, and exchange rates. Conversely, a decreasing USDX indicates a weaker dollar, which can impact export competitiveness and even the inflation. So dollar value going down means it can affect the inflation, obviously. So during periods of market volatility or global economic uncertainty, investors often turn to dollar as a safe haven. So they go into the currency, which is in US dollar. So increasing its demand related to other currencies and strengthening its position. So on the screen you can see it's the US dollar index. So obviously it is 106 or 105, whatever it is, like it shows it is above 100 benchmark. It is showing a dollar strength above the other currency. So it is normally in the range, it trades in normally in the range 100 to 106. So it shows the relative strength of the US dollar. So the question, what makes US dollar strong? So if you see on the screen, a resilient economy, that is, as we discussed, high productivity, low unemployment rates, and stable inflation. So this is one thing. Favorable economic indicators entice investors towards US dollar. In the sense, robust GDP growth, increasing consumer confidence, healthy corporate earnings. So this is another few factors which is creating more value for the US dollar because it is strengthening the economy of USA. Then the third, the monetary policy by the US Federal Reserve. Say measures that result in increased interest rates or stricter monetary conditions. So if they increase interest rates, then the FD returns become more, then the investments to US increases. So more demand for dollar because they are putting FD or deposits into the deposits is coming from outside into the US. So again, demand for US, more demand for US dollar means the dollar again appreciates. Now, geopolitical stability, like uncertainties in other countries regarding politics and economics. So, if there is a Russia-Ukraine war, so there is uncertainty in Russian economy, then Ukraine economy. Then, if you say European economy, they have got cut off gas and energy supply from Russia because of sanctions from West and US. So, because of this, there is uncertainty worldwide, and US is not actually going through such things. So, because of such geopolitical stability, also the economy is felt strong by other countries, and they again invest in or trade through US dollar. So this again reinforces or strengthens the US dollar position and hence appreciates it. And finally, the global recognition of US dollar as a reserve currency. So if you see, majority of the reserves, including India, is having a, as I believe, around 580, 590 billion US dollar reserve with us. So various countries, Russia has got similar reserve as that of India of US dollar. So it is different case that the sanction was done by US and the complete reserve, US dollar reserve was freezed for Russia, and they were unable to transact using US dollar, which actually was done so that they don't fund the Russia-Ukraine war, so they don't pump money into the war, so that the war comes to an end. But that didn't happen. That's a different case. So if you see the world's currency reserve, as I speak, almost 61 to 62% of the world's currency reserves is in US dollar, and rest is in Japanese yen 5.25%, Swiss franc 2.45%, and Canadian dollar 1.92%. So there is euro, there is 20.24% euro, which is also sizable compared to the other Japanese yen, Swiss franc, Canadian dollar, Australian dollar, Chinese currency, pound sterling, etc. So still US reserve, the currency reserve, just like it used to be in the case of gold, wherein it was more than 60% gold reserve was with US. So currently also the US dollar reserve is still in US dollar, which is above 62, 61, 62%. So as there were a lot of sanctions by the USA during the recent wars and even during the earlier wars, so the countries are getting confused and they are becoming uncomfortable with the way the US is utilizing its undue advantage by sanctioning the countries. Though US had promised that he will not do it again, but people are or the countries are so much bothered, and then now various countries like China, then India, then Russia, everybody is looking for their currency, local currency internationalization. Means in the sense, in case of India, rupee internationalization. In the sense, we will be using whatever trades we are doing with various countries, foreign countries, will be done in rupee. In case of Russia, they will be doing in their currency, and in case of China, they will be doing in their currency. So this will help strengthen their currency and don't give undue advantage to the US dollar. So they will never use US dollar. So going forward also, if this happens, then US dollar may come down, but not so soon. It will take time. But now the people have started realizing the facts, and they are now moving on to their local currency internationalization. So hope this session was useful for you. Please do watch the second session also, because there was a kind of complained that the videos are very long. So you see the concepts are complicated, so that is why I'm taking a lot of time to do the detailed video. It is also difficult for me to do such long videos, but it is important that I deliver the complete concept through the video. But based on this request, I have split this video into two. So this is part 1 out of 2, and the next one we'll be discussing further how the US dollar has dominated and will be dominating going forward, at least in the near term, especially concentrating on the concept of petrodollar recycling. See you next video. Till then, happy investing.